Today, I want to talk about the biggest mess up ever in the history of synthetic shorting. This article talks about the accidentally released documents confirming that Goldman Sachs, Morgan Stanley, and other big market makers engage in synthetic shorting. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, you may remember the other week, the SEC brought some charges against a smaller hedge fund or smaller market making firm for engaging in synthetic shorting. Some have been saying this was a very one-off example and that really synthetic shorting does not happen. It doesn't exist and it's a myth, just simply this one-off rare case of a smaller firm engaging in illegal shorting, and that's why they were caught for it. As I'm going to explain, this article talks about the accidentally released and incredibly embarrassing documents that show how Goldman Sachs et al., including Morgan Stanley and other big market makers, do engage in synthetic short selling. It explains that synthetic shorting is not just a one-off event that is always caught by the SEC and only happens among these smaller firms. It's actually more prevalent in some of the largest market makers like Goldman Sachs, Citadel, Morgan Stanley, and others. This article starts by saying it doesn't happen often, but sometimes God smiles on us. Last week, he smiled on investigative reporters everywhere when the lawyers for Goldman Sachs slipped on one whopper of a legal banana peel, inadvertently delivering some of the bank's darker secrets into the hands of the public. The lawyers for Goldman Sachs and Bank of America have been involved in a legal battle primarily with the retail giant Overstock.com. The banks have been fighting us to keep sealed certain documents that surfaced in the discovery process of an ultimately unsuccessful lawsuit filed by Overstock against the banks. And in response to an Overstock.com motion to unseal certain documents, the bank's lawyers apparently accidentally filed an unredacted version of Overstock's motion as an exhibit in their declaration of opposition to that motion. In doing so, they inadvertently entered into the public record a sort of greatest hits selection of the very material they've been fighting for years to keep sealed. In one example, we have a former Merrill president saying in a 2005 email, "We are not borrowing hard to borrow stocks or negative stocks. I've made that clear from the beginning. Why would we want to borrow them? We want to fail them." Trafalgar, in other words, didn't want to bother paying the high cost to borrow negative rebate stocks. Instead, he preferred to just sell the stocks he didn't actually possess. Trafalgar was talking about creating fails or failed trades or creating FTDs on purpose, which is what happens if you don't actually locate and borrow the stock within the time the law allows for those trades to be settled. In this case, that resulted in absurdities like the following disclosure in this document, in which a Goldman executive admits in a 2006 email that just a little bit too much trading in Overstock was going on, by saying 2 months ago 107% of the float was sold short. And he said we have to be careful not to link locates to those FTDs, because we've told the regulators we already can't do this, and the FTDs are being created on accident. And it says one of the companies Goldman Sachs used to facilitate these trades was called SBA Trading, whose chief executive was fined $3.6 million in 2007 by the former American Stock Exchange for synthetic short selling. And the document all by itself shows numerous executives from Goldman Sachs and Merrill Lynch talking about a conscious strategy of failing trades. For instance, in one email, Goldman Sachs tells a client, Wolverine Trading, "We will purposely let you fail and purposely let you FTD these shares." And in that article, they actually linked the very legal document where that lawyer from Goldman Sachs accidentally posted the unredacted version in the actual lawsuit. Guys, if you didn't already know, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward with Moomoo, which you could always use to buy more AMC, GameStop or Ape shares. All you have to do is sign up to Moomoo using the link in the description below and make a required qualifying deposit. You can deposit just $100 for those 5 free stocks and that $100 cash reward. If you want more free stocks and that guaranteed free share of Tesla or of Google, you just have to deposit the required qualifying deposit amount. Now from pages 14 to 19, it gets really interesting. There's tons and tons of bullet points included from that unredacted document. The most damning bullet points where they effectively confirm that they are indeed committing synthetic shorting offences. And it talks about how Merrill's traders were knowingly allowing clients to build up FTDs over a 13-day period and then rolling them every 13 days to a different market maker. And many of these market makers were doing the exact same thing, allowing their clients to also rack up these FTDs for 13 consecutive days and then rolling them to another separate market maker again. So you basically have this organized FTD ring between a number of different market makers, all allowing their clients to commit FTDs for 13 days straight and then effectively just passing the bags to each other, thereby resetting that countdown. And it also explains how all of the market makers know exactly which other market maker is about to reach their 13-day period and which market makers will effectively need to roll or trade those FTDs. For example, Merrill's CEO says, "I understand that we have the same issue with market maker 369 that we had with market maker 551. How and when can we prevent that delivery?" And Steve understands that separate market maker number 671 will fail on his negatives or on his FTDs. And he said, "I think that transfer will affect his shorts." So it effectively shows all of these market makers are actually colluding and working together, allowing different market makers and different hedge funds to fail to deliver shares of AMC, and then purposely being there on the other end to accept their rollout. And that is likely how we've set a new all-time high for a short volume as a percentage of total volume the other day at 76%. You can see here on the 22nd of June, so yesterday there was 18.4 million shares of AMC traded, and somehow 14 million of those shares were short sales. That means that a whopping 76% of all transactions yesterday for AMC were new or existing short sales. And something I found very interesting, if you draw a trending line from June, August of 2022 all the way to now, we can see day by day this short volume as a percentage of total volume has been increasing every single day. And that's why I Suspended POS tweeted, he said the hedgies' only tactic is to prolong and exhaust AMC retail investors. He said it's clearly obvious with the lawsuit. They stand to lose trillions across the board on stocks, not just an AMC, not just one or two individual market makers, but the entire of Wall Street stands to lose trillions across the entire of the stock market. He said you can't sell something you don't own. It's simple. You must locate and deliver, and therefore time is running out for them, especially because these market makers are clearly colluding together, allowing every other market maker and every other hedge fund to fail to deliver on their transactions in an organised way. But as Doc Huckleberry has tweeted, he submitted a direct complaint directly to the SEC's inbox. You may be confused that this is not on the SEC website, but it's actually on a website visited by the SEC a lot more than their own website. He said, "Hello SEC, I'd like to file a complaint regarding the illegal market manipulation of AMC and GameStop stocks." He said, "I know you're here on this intentional website as opposed to doing your work. Thank you very much. I personally think this may be the best way to grab the attention of the SEC and to submit complaints directly to them instead of going through their automated email system, which likely just deletes any complaints anyway." And we can see the shorts are getting more and more desperate as we're seeing an increased activity in those known shills and that group of AMC fudsters. For example, Lou yesterday posted 7 individual videos on objections to his AMC injunction letter. Clearly the shorts are paying him overtime money to produce so many videos to try and stop the AMC conversion and reverse split. As I've said in the past, unfortunately I'm not paid off. You guys would know if I was paid off because I'll be on some nice deserted desert island somewhere. So unfortunately for now I just have to make do with my YouTube money until AMC squeezes. And finally for today, you may have seen part 2 of James O'Keefe's video where he went to confront that BlackRock recruiter who denied his own words, lied repeatedly, and even hid in a police station after questioning. Unfortunately, Sergey has deleted his LinkedIn, but in that James O'Keefe second video, he tried to suggest he was a low-level employee. However, I do remember seeing on Sergey's LinkedIn that he was definitely not a low-level employee, having worked across Wall Street for the last 10 to 20 years consecutively. He'd worked at multiple different companies on Wall Street across Goldman Sachs, Morgan Stanley, Citadel Securities, and BlackRock in a more than 10 or 20-year recruiting history. And that goes to show he is absolutely not a low-level employee and is likely a director or even partner of HR or of recruitment, and therefore knows exactly what's going on inside BlackRock. BlackRock. James O'Keefe also said in this video that he's also going after other higher up employees at BlackRock, so it'll be really interesting to see if there's a part 3 and part 4 to this video investigation as well. And as I said the other day, I do want to see James O'Keefe also investigating Citadel and investigating more of exactly what happened with AMC and GameStop and getting better resolution. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.